Hi, Tom Lydon from ETF Trends here in Chicago at the Morningstar Investment Conference with Dan Draper, who's Managing Director, Global Head of ETFs at Invesco. Great seeing you, Dan.
Great to see you, Tom.
You folks were pioneers with factor investing, although most people think about ETFs from a pure cap-weighted in traditional index standpoint. Early on, you felt it was important to offer up factors because it's maybe a smarter way to index, right?
Absolutely. I think if you look back, even maybe 20 years ago, I think a lot of investors now are very comfortable investing in style, right? Large cap, small cap, value growth, and even sectors. So there's been a data diversification. But if you look back to PowerShares beginning 2002, 2003, the idea was let's experiment with some of these other factors, low volatility, momentum, quality, for example. And we've really kind of started with a very complicated multi-factor approach. But what's interesting is as we've built out our product range, we've seen the success of multi-factor, we've actually, on an education perspective, really gone to single factor and pairing factors together in the idea of helping to educate that really factor diversification can really matter, especially for long-term investors.
Yeah. You also do a lot of research with institutions.
Yeah.
And not only have you kept a finger on the pulse as far as the percentage allocation to ETFs that institutions have, but now you've put in how much are they allocating to factors?
Yeah.
Maybe talk about that.
Yeah, it's interesting. So we've built in-house, we call it the DNA Factor Blender. So we really start with institutional clients, we start with performance attribution, okay? Let's look a little bit at the past. And for example, you'll find an institutional investor, well, I really have a value focus. Well, let's look at that portfolio. Did you actually realize that there was maybe 20% in quality? Or 20% in low volatility? Was that an intended decision you made at the beginning? And at a basic level, that's just new information.
Yeah.
So if you can help them through the attribution, and then generally step two is, well actually I really want more of a deep value exposure, well let's help tilt you back to that value. Or actually I like the quality, I want more of that, or momentum. So it's really starting first about attribution and then helping to educate about putting factors together better on a portfolio level.
So I've seen this tool and it's pretty good. You have it up on the big screen,
Yeah.
you punch in your portfolio.
That's right.
And then you can dial up or dial down certain factors, and then what ETFs represent those factors if you decide to make that allocation.
That's right, that's right. Because what we do is we go, with most institutional clients, they'll go immediately to the investment policy statement, what they need to deliver, and can we really, again, help them look for unintended consequences, but it's a discussion.
Yeah.
And it's just really driving it more towards solutions and thinking about overall ways that we can really help the risk-adjusted return process for these institutions.
Because some factor strategies may be low volatility, for example, but over time, the constituents within that index may in fact change the factor that they represent, right?
Absolutely. And it's funny, you look at even on a factor basis, we found some clients who wanted to have value and momentum, and in some market conditions, they can be negatively correlated. But that's the point. So some clients who are thinking about diversification, intentionally, how can I tilt more this way or take some off? And I think that's where having, for us, the big partnership with S&P on single factors, you can do it yourself, but then also we can do pairings of factors and ultimately multi-factor to kind of offer them the full range of that exposure.
So if you're an advisor and interest, talk to your representative and say, hey, how can I get on the big screen and try my portfolio out?
That's right, absolutely. Try it out, look at what you were getting, was that intended or not? Yeah. And like I said, even if you decide not to go down the factor route, I think factor attribution gives you valuable information and insights.
Yeah.
And I think that is value that any good active manager in particular can really use to their advantage.
Absolutely. Dan, as always, thank you.
Pleasure, thank you.